Hey everybody, we appear to be streaming live. Welcome to today's, let me turn that down just a little bit. Okay, welcome to today's market recap. Today's guest is Gary Burton. We'll be starting here in about 6 minutes. I just wanted to point out a few things. One, you may have noticed the background's a little different. So I'm not coming at you from my basement today. I'm actually coming at you from our Metastock studio. It's not a full setup yet. It's sort of an abbreviated setup. I just came in today and put some quick things together. But we are beginning to move back into our office here in Utah in the United States. And we're very pleased about that. I hope everything's going well in your local area with this whole pandemic issue. It seems to persist. We are taking precautions here in the office. We're having, if you care to know, we do have altering days and we have very vigorous cleaning staff and we have masks and all that. But we're really pleased to be getting out of our basement, seeing the light and coming back into our office. So anyway, hey, if you are here, go ahead and say hello and tell us where you're from. We'd very much like to hear that. And a couple things I did want to mention. Let's see if you can hear me. Yeah, it seems like you can hear me. A couple things I did want to mention is we do have the Trader Summit coming up on September 19th. That is 8 speakers talking about 8 different topics, but they're all about trading, and it's free, and we invite you always to join us. If you want to register for that, you can go to traders-summit.com, and there's a quick registration process. And as well, if you go to the very bottom of the page, you'll see that there are freebies that the presenters are all providing at no charge, just for registering. So it's a really great event, and I know you won't want to miss it. So don't hesitate to visit us at traders-summit.com, traders-summit.com, or metastock.com/traders-summit. They both work. Another thing I wanted to mention, what was it? Oh, we are Metastock. We are purveyors of analysis software and market data for traders just like yourself. And if you don't have Metastock, you'd like to try it out, we always encourage you to give it a try. Right now, if you go to metastock.com/P220, P like Papa, 220, you can get a 1 month or 3 months of Metastock for the price of one, which is a great deal. Again, go to metastock.com/P220, Papa 220, or just go to metastock.com and chat with one of our guys and tell them you heard about that Metastock 3 for offer, and they can help you out. That works both for Metastock Intraday and Metastock RT, and it's a great deal. All right, the markets took a little bit of a kick. Let's see, is anybody here saying hi? Is my chat on? Hey, don't forget to say hi, and let me make sure and let me know you can hear us okay and see us okay. Again, I just plugged all this in just about an hour ago, so if there's issues, I apologize. I don't think there are. Anyway, I'm going to go ahead and put myself on mute and make sure Gary's okay on the other side. And again, as you're coming on in, say hello. Let us know where you're tuning in from. And thanks so much for joining us. We'll be on in about 3 minutes and 43 seconds. Okay, hello again. Sorry, I just had to take a moment to gobble up some fries before it came back on the screen. Once again, today's guest is, Gary Burton. I see now we got some people coming on. Hello, Nellie from Philippines. It's always good to see you again. Nellie, can you hear and see me okay? Give me a thumbs up if you can. We'll be starting here in about 1 minute. I see Gary's waiting on the GoToWebinar side. By the way, we are being broadcast today only on YouTube, and this is the only place you can see this. And if you have questions, please do chat them in. We encourage questions. If you have any similar requests or anything like that, go ahead and chat them in now. This is live, and we're here for you. Yep, looks like everything's okay. Nellie, can you give me or anybody out there, give me a thumbs up if you can hear me and see me okay? It's a new setup, and I just want to make sure we're not off to a bad start. Okay, we got a little bit of delay. All right, well, it's time to start, so I'm hoping that we do have good audio and video. And ladies and gentlemen, with no further ado, I give to you Mr. Gary Burton. Mr. Burton, are you there? Whoops. Maybe I got the wrong thing going here. Oh, the wrong thing. Gary, you there?
Yes, Greg.
Okay. We are live. Thank you so much for joining us, Gary. How are you doing today?
I'm very good, thank you.
Thank you. Did you want to share your camera with us today or no?
No, I've not got my camera today. I'm working off two screens.
That's fine. That's fine.
I did send you a photoshopped photo this morning. Maybe that can go up.
Well, unfortunately, I can't do that on the fly with today's setup. But I know I'll just tell people you're a very, very handsome man. I'm the likes of which they probably haven't seen before. So
yeah,
that's really all they need to know. Gary, let me go ahead and read off a little bit of stuff I've got here handy, if you don't mind. And Gary, let me know if any of this is wrong or needs to be updated. Gary Burton is the director of the Australian School of Technical Analysis. He's a member of the Australian Professional Technical Analysts Association. He holds the accreditation of Certified Financial Technician from the International Federation of Technical Analysis, IFTA. He conducts regular workshops on technical analysis with the signature workshop, the Candlestick Masterclass. He's been teaching traders and investors how to trade since 2004. Gary, does that sum you up pretty good?
That's about it, yes. Thank you.
There's not more?
No, we'll leave it there.
Do you have a dog?
No dog. But I do live in beautiful Airlie Beach in North Queensland.
That sounds delightful. Salt Lake is also very beautiful, but we have no beach to speak of.
Yes.
Yeah, so. All right, well, Gary, it's been sort of a shaky. Well, there's the first question I have for you. Being a resident of Australia, what markets generally do you trade?
Well, I generally trade the Australian Equities Index. I take a medium-term view and hold for days or weeks at a time, based around simple trend analysis. Also doing a lot of work at the moment around futures trading, particularly the S&P 500. So taking a very strong interest in that at the moment, developing up some strategies around that, very short-term strategies, and looking to trade, because in Australia we have the benefit of being able to trade through the European Open, and often you don't get the volatile swings that you might get on the US Open. So it's a nice place to trade when you got your L plates on, particularly in the futures market.
Well, as you probably know, the American markets took kind of a hit the last few days, primarily because of technical FANG, a couple of members of the FANG. But I'll let you go ahead and tell us what's going on. What's going on? Oh, so, also you need to tell us all how to make $1 million before this is up.
Okay, we'll get there.
All right, thank you, sir.
So it's been as the new traders to the market found out this week that it's not all upside in equity trading, and often the downside of markets can be very, very quick, particularly if you're holding leverage or that type of thing, and particularly if you're on the wrong side in the options market. Options can lose value very, very quickly. It's yesterday and today have been great lessons in technical analysis, in the use of technical analysis for trading. So you can see my screen at the moment. Yeah, so you can see this is the NASDAQ here. So we can see that the low today, the low down here, this is, now I should clear this up first. I run the icon side of the program. It's something I do a lot of work for Thomson Reuters on. I do a little bit of work for Thomson Reuters, so I use their side of the platform, the Refinitiv side.
Yeah, our customers would know that as Zenith. That's the retail version of the icon.
Yeah. So it's available to every Metastock user, of course. So so I run the two charts here. All my charts generally, when we do sum up, when we look at something to see how it's performing, we always look at the weekly chart first, and you'll see that on the right-hand side of the screen. And I mark up the significant support and resistance levels along the way. And I mark this little SH is a thing called a spike high, where we have a bar with a lower high either side of it. So, and the OP is just an outside period or an outside range, and I tend to mark up my charts consistently with those. So I've done a very really basic markup here of the NASDAQ, and we can see over here on the left-hand side, which is the daily chart, the lows today came in and really tested this initial breakout area here. So we would take the view that we haven't even got a correction in the market, even though it's fallen basically a bit over 1,000 points in the range, but it's still not corrective. To be corrective from a technical perspective, it's got to take out a previous significant low, and that's back here around 10,800. So a lot of work to do yet for this to break its trend, if you like. So we've got, as you can see on the right-hand side, we've got a significant movement in the index out of the March lows, and it has. I think everyone has said this at Infinium that the US market has defied logic in a lot of cases. There are commentators at the moment saying that the US market capitalization is 77% over the GDP value, which is just bubble territory. And then there's others. If you look at Business Insider, well, they estimated about 10% over real GDP. So I would tend to shy away from reading too much about this and just look at what it actually does, and from a day-to-day, week-to-week perspective, and look at these areas of congestion, and in the NASDAQ here around this 10,400 to 11,200 is this area of congestion, and we really came back today to test that breakout level as it went into its run. Now, the issue, of course, and this will show up on all of the charts, and you look at Amazon or Microsoft or Nvidia or any of those, this type of movement shows up on all of those charts. Now, the key here is because this we've had in the weekly chart here, we've had an outside range now. In this case, it's taken out the previous 2 weeks of price gains in its range. So what we had at the beginning of the week, we had the bulls in control. The buyers are in control of the market. They're pushing the market higher. And as we got to Wednesday, Thursday, the bears took over. Selling was overwhelming the buying, as simple as that, and the market got pushed lower. So now we have today, with the rally off the low, the intra-morning low, which was, I think, around 11:30 US time, the low was put in and we rallied into the close. Now, lots of things you could say about that. Prior to a long weekend, yes, you'll get a bit of a rally, bit of a short cover on there, that type of thing. But it means that some are going home long as well on this Friday afternoon. Now, what we have with this large volatile movement is now we have confusion. We have the buyers that were in control at the start of the week, the sellers were in control the middle of the week, and now we've landed basically in the middle of the range in most of these movements. So I would suspect that what we will see out of this, and we saw it back here, one part of it here in July, we saw just this consolidation for days and literally weeks at a time. And I expect now we will see the same thing. We will see the same type of consolidation. So we've got our markers. Our marker is the high up here on the 2nd, and today's low. So there are two lines in the sand, if you like. But I would suspect that we're going to see weekly consolidation through here as the market regains its composure and the buyers and sellers really work out who's in charge here. So don't be surprised with following this type of volatility that we see some form of consolidation in the coming weeks around that. So what I'd like to do today, so we've got the NASDAQ has done that. One of the key aspects when I say that the US market has done so well, which it has done incredibly well in the face of this upside down world we live in, when you look at the Australian market, and I'll come to some more detailed charts in a moment, but our market, you can see on the right-hand side here, our market really corrected back in February, March, really corrected down, and now we've come up. So we've had this large range volatile movement as the buyers took it up in here to over 7,000 points, and this very large corrective move, and now we've got this consolidation within that range. As saying, that's what I would expect in the short term in the US indexes at the moment. So we haven't recovered anywhere near what the US has for various reasons. One of those reasons, for those not living in Australia, one of those reasons is we have hard border control around the coronavirus pandemic. So our borders between the states are basically locked at the moment. Very hard to travel from one state to the other, and which hampers business, hampers confidence, all that type of thing. We saw a lower consumer confidence print just a couple of days ago, and that's now showing up we're right in the middle of this range from high to low, and just showing up as simple consolidation. And in our market, our Friday market, which is your overnight market, we saw this break, this short pattern line here. We had 3 lows in this ascending daily pattern, with the 4th one here, and now we've really come down off this lower high on Thursday and broken the low of that. So we're in a very, very different place. So the point I wanted to make with this is, when you look at a market, when you sum up a market, go and have a look at the big picture first about what it's really doing as a big picture. Step back and then work out in your shorter time frames how you're going to approach that market. So it comes down, each market has its own personality. There's not one hat fits all here. One of the other confidence things I see, let me come back to the...
Gary, is this a good time to ask a few questions?
Sure.
So a couple of things. I'm curious, are you a price action trader? I notice you're drawing flags and support and resistance lines. You're essentially looking at patterns. You're not using any indicators or...
Yes, very much a price action trader.
Okay. Which is fine. Also, I mentioned to the viewers just before you came on that here in Utah, in America, we're actually just now coming back into the Metastock office. We've been home for 6-7 months now, and we're just coming back in.
Right.
Do I understand in Australia, are people still mostly at home, not able to go in their offices, or is it mostly just a state-to-state border issue?
It's in Victoria. In Victoria at the moment, it is a complete lockdown. You cannot. You basically will be sent home if you're found outside for more than an hour. We won't go into the politics of that.
No, I didn't expect. I just because you mentioned.
Go
ahead.
Yeah. I was
So,
going to say Victoria is in complete lockdown. You cannot travel out of the state. You cannot travel within the state. The other states have really just social distancing controls, that type of thing. In Queensland here, you cannot access Queensland from any other state at the moment. So
I see.
Queensland's very big on tourism. Tourism industry is on its knees at the moment.
A final question, if you don't mind. You'd mentioned it's
Yes.
important to go back and look at the entire market. I'm assuming you meant
Yes.
from a technical standpoint, or did you mean people should really be keeping an eye on the fundamentals and, let's say, the pandemic and things like that?
Yeah, not so much the fundamentals, because as I was saying earlier, the US fundamentals make no sense at all. A lot of commentary around that, and I won't go there. But the if the market's moving up, you've got to be with it. If the market's moving down, you've got to be with it as well if you're a short side trader. And here we have the S&P 500. This is the weekly chart of the S&P. This week has posted this outside range here. Very important bar this week, and I've marked off basically the midpoint of that, the middle of the range. So we'd be looking for that middle of the range area on there as some form of support or resistance in the coming weeks. We'll build a price pattern around that. Now, if this gets ugly into the lead up into the US election, we've got to come back and say, well, look, here's our next support level down here, around about this 3,250 becomes our technical support level on this, in this range. 3,210, 3,250 becomes our next technical support level. It wouldn't be unusual to see a break of this low if the market went that way and move into this area just to retest to see who's still on board here. There is the key in the short term. The key for that will be a break of this previous high. We had now two closes above this high, 2 weekly closes above this high, 3 weekly closes above this high. If we see a weekly close below this high, I'd say that the bells are starting to ring in the short term, and we should be looking a little bit lower there. You see back here the same type of price action in 2018. We saw this high back here was closed over once, and then it was reversed, and we saw a break. There was an outside period here, an outside range, and we saw the market break lower over the following weeks. So I wouldn't, I'm not in a position, if you're a technical trader, you cannot be in a position to have a biased view about the market. You need to make your assessments around the price action. We can see here that also the relative strength now didn't make it over 70 and has started to turn down on there. So I'd be a little concerned with that. We saw the same issue back here in Q3 2018, where it really didn't make it over the 70 and turned down. The initial hindsight's a wonderful thing, of course, but the initial top back here in March was put in by this relative strength divergence signal, and it really gave no notice because it was so quick with the gap down and the sudden movement down. But the technical signs were there, and here we are. We failed to move over the 70 level. I don't take the view that over 70 is overbought. That's if you really do a bit of research on that, you'll find that stocks in particular can range over the 70 level on the relative strength for literally months. It just means it's very strong momentum, and you'll see that in the price anyway. But clearly, this week gave a reversal signal or a consolidation signal. The low will be the key here on this market. When you look at the US, some of the numbers around the US, for example, car sales came out this week at just over 3.5 million. Truck sales, a staggering 11.6 million, that type of thing. We saw the jobs numbers, an increase in part-time employment, but a fall in full-time employment, which is a thing that will wash out over the next few months. Now, one of the more important things happening between countries, if you like, is that we saw US imports from China drop 11% there. So when you look at the increase in truck sales and the drop in imports, it means that in my limited knowledge of economics, I'd say that the US is gearing up through a manufacturing phase. And if you look at the Dow transports, for example, the transports are almost at an all-time high again. So things are still well, in the market itself. Things are still pretty much under control. If you just turn off the noise and look at the price action itself, it's really backing up what's happening in the background. China exports, just on that, China exports overall recorded about a 1.4% increase month on month, just a week or so ago. That's more just a recovery in other parts of the world, Europe and Australia, for example, and Asia. But it is telling that the US imports are down 11% on that. So the S&P 500, you'd be looking, this is the middle of the range. For those using Metastock, you'll find my notes inside Metastock called the Haguro method, which works around this middle of the range methodology, Japanese methodology around support points. And here's an example here. Back here in this June-July area, we saw this also this outside period here, and I marked off the middle of the range, and you could see that acted as resistance for 2 weeks, to closing price resistance for 2 weeks, and then finally it broke through and on its way. And we saw as it broke over that high, a little bit of consolidation again, no reversal in there, and off it went into a new high. So the S&P 500 is still very, very much intact. So when we talk about the improving economic conditions around the world as we come out of hibernation, one of the better charts to look at this is copper. And the copper chart, really the end of the world was nigh back here in March, April with the price of copper. So copper is a very, very good indicator of economic activity. And of course, the big issue with copper at the moment is there are very low inventory levels in the London Metals Exchange. I think the inventory tonnage at the moment is sitting around about 82,000 tons, which is limited supply over the next few weeks. They really need to build that inventory again. And we're seeing that not only this increase in economic activity in China pushing the price of copper, but this fear of a copper shortage as well, pushing the price high. And we saw it close on its high this week. This is a weekly chart again on there. So very important that it's broken the big resistance level here at $2.98 a pound. Saw the first rejection point. It built itself into a bullish flag and then put in a large range move out of there and has now moved away from this flag. I would suggest that this area up here, this $3.30 would be the target on the price of copper. In here we can see that the relative strength has moved to the 70 level way back here, way back into these into this June area back here. It has now moved over the 70 level in line with the price making a new high. So there's really no divergence. It just says that there's very, very strong momentum on there. Where you get interesting things with the relative strength is areas like this, where you see the market, I'll put a crosshair on this so we can see it, line that up. We saw the relative strength move over 70 here and the market made a high. Now, just remember when you're looking at divergence in relative strength, you always use looking at the closing price, not the shadow of the candles. That's because the relative strength is calculated on the closing price. So here it is over 70. Then the market pulled back, relative strength pulls back, market moves into a new closing high up here, and relative strength makes a lower high. So there's your classic divergence signal in relative strength. You'd be on high watch now for a potential reversal. We saw lots of consolidation over a couple of months, and then the reversal came in as the market moved lower. But on the business end over here, there's really nothing to see in the relative strength other than there is very strong momentum underway with a potential price target up here at around $3.30 So copper very much under control there. What we also saw this week was, this is again a weekly chart of West Texas oil. This consolidation over the past number of weeks here, this big support level at $42, big support at which became resistance in basically April, May, June. And I in my notes that I wrote it's the dullest market in the world at the moment, but it's suddenly today livened up. Anybody that's read John Bollinger's work, John will tell you that low volatility begets high volatility, and high volatility begets low volatility.
Yeah, that's a squeeze, definitely.
Certainly what we've got there. Yeah, certainly what we've got there. Yeah, if we put a Bollinger Band on there. Oh, no, there you go. It's not so much of a squeeze, but not as it has been up here. But certainly,
it's based on a 20-day average, if I recall. So it's still got to recover from that big dip, but it's definitely going in that direction.
Yeah, certainly the bands are narrower than they have been out here. There. So I think at the midpoint, and I'll just see if I can open this up a little bit. The midpoint here, I've marked off this midpoint of this bar back here, and it sits in here around about $39. And we can see that it's provided support for a number of weeks and then the breakout through here. But this week, it's really come back to have a look at that level again. These lows through here is a little bit of concern. This will be the big level in the next week or so to see if this level holds here. Failing that, there's a real chance, because we've got a pivot point now set in a reversal pivot in oil. There's a real chance we'll come back and have a look at potentially, and I'll put the line on there, real chance we'll come back and have a look at this level down here. This large range bar here, we look at that as the midpoint. So around about the $37 mark, and then after that, you just pick a number if it breaks that level as well. And it's really just adding to the potential downtrend overall in oil. So a little bit to watch there. There was a lot of global talk about cutting supplies, that type of thing, but the market is the market. This is where the money is, and I would encourage traders to look at your price action more than anything you read per se. So just on that, big interest, of course, at the moment is gold. There were some very interesting numbers came out from one of the research houses in the US, whose name escapes me at the moment. But he put a table out of a study of the last 4 major gold markets going back from the late 70s to now, the 4 major runs in gold, and he basically stated that 6 months later, after the initial top, and this is the initial top because it has the outside range in here. This is a daily chart. This one has once the top's put in, and you start to look at these lower highs, he said the chances of it regaining that top within 6 months is basically zero. So we're seeing the volatile move in gold, and now we're seeing the consolidation area here. This area, this level here is the one to watch, this $1,910. This is the closing price low of the initial move. It's been tested, and this week we had a very close look at it again. Of concern is the relative strength has moved out of this overbought or over 70 area and moved along the 50 line. Now we've just dipped below the 50 level, but I stress this is a daily chart. It has a descending pattern in here. The uptrend line is still intact. We checked that today. So it's really now at an inflection point, really needs to hold these levels and start moving up. Otherwise, we're going to see the buyers in here, as this moves lower, these positions that were bought through here, if they're still being held, the losses will be increasing and picking up a number of buyers through these rallies we'll see eventually give up point and potential capitulation move out of there should we see a significant break of support. So remember that the market is only about buyers and sellers. That's the only thing that occurs in all the markets in the world, is only buying and selling. And there's certain levels, certain emotional levels that people will hold their position through until there's a give up point. So if you're believing what you read, some of the gold bugs are telling you we're going, forever to the moon. The chart doesn't tell you that at the moment. History doesn't tell you that statistically. So an interesting time at the moment with some good levels currently to watch in gold.
Gary?
There as well. Yes?
I'm sorry to interrupt. It just occurred to me as you were talking about that we never did mention our disclosure before. I don't think I did. This is a good time to remind folks that this is not a recommendation to buy or sell. I'm not going to go ahead and read the whole disclaimer now. I'll read it at the end of the presentation, but this is for display purposes only, and we're not recommending that you buy or sell any of the particular symbols or securities that Mr. Burton is discussing today.
Okay. Yeah, of course. I mean, of course. So no, I'm not recommending buy or sell in here. I'm recommending that you watch the price action and be careful around some certain levels. Looking at silver, we have the same issue now with silver, where we had the high came in with silver. This is a daily chart of silver. The big resistance level here is $27.70 here. Put in a pivot point, and this high here, you notice I've got FO on there. It's a fake out high. It's taken out this, I'll just move that out of the way. It's taken out this previous spike high here. So we call this the fake move, and it's put in a pivot point and then broken out of this pattern. So interesting. I hadn't seen today's action, but we're really starting to set up this support level here around this $26 mark. So be aware of that. Today was a good day in the price of silver. We'll see where this goes next week. So a good look at the moment in this consolidation phase. So again, I just remind what I was talking about earlier, that you get these very sharp movements, these very risk-off movements, protection of profit movements, and then we get this long periods of consolidation. And it's how something consolidates can give you a lot of information about how it's going to, which way it's going to break, of course, and how it's going to perform in the future. The key about this is when we look at the fundamentals behind this, why everyone's buying silver and why everyone's buying gold, when we look at the story behind it, nothing's changed in this run up. This run up here in gold and silver, the fundamentals that they're claiming is driving it up there haven't changed, and but we're seeing this resistance now come in around this $28 mark, $27.70 mark, and support here at $26. So a break of this again, anything above that level, we'll see forced hands. The weak hands will come out, and you'll possibly see a bit more selling back into this trend line through here. So our trend line is actually sitting there, sorry, back into this trend line. So don't be surprised if we saw silver back into these $23, $22 marks on a significant break of these levels here. So gold and silver, big consolidation areas around that. For those on this part of the world, I'll quickly get through this. This is the gold price in Australian dollars. When you look at the underlying gold stocks, have a look at Newmont and Oceana Gold, that type of thing. They're really not performing like the gold price is. So the market's also telling you there that there may be some, the market's really not that confident in where all of this is going. So here we're seeing the Australian dollar gold price break out of the highs, and now really grinding lower in here to test this previous low down here at 2,621, around that level. I wouldn't be surprised to see this level tested, and we'll get to some stocks in a moment, but this sort of 2,600 610 level, see that tested ultimately. You can look at the price action here, very large range push down, very large range push down, very large range push down, and then these weak daily movements to try and recover, and then a larger push down between open and close here. So certainly the sellers taking this on and a bit lower as well. Relative strength on here has, this is actually a good example of saying that when relative strength gets over the 70 level, it doesn't necessarily mean it's overbought. It ran from essentially late July here out to the highs up through here in early August. So it's the daily chart here, but it can run for literally months overbought conditions on the relative strength. What is important is the 50 level. So we now have momentum pushing to the downside, not to the upside. And so Australian dollar gold will impact the local producers, the local Australian producers. Just one more chart here also is the US dollar index. And I'll get to some stocks in a moment. US dollar index has now put in this consolidation period here. It is also grinding lower down through here. The key levels here are 92.10, 93.75 on the upside. But this large, and this is a daily chart again, this large trend underway down here is met with this consolidation period. We saw the same type of consolidation back here with the grind lower, and then finally the impulsive move out of that consolidation. Very good chance we may see an impulsive move out of this consolidation area as well. What I don't like about this is the relative strength has moved below the 30 level. It is also grinding higher. You could argue that there is some divergence in here, but we're putting in lower highs here and lower lows, really not confirming what we should be seeing in the relative strength. So I'd be a little concerned about that. When we look at some individual stocks around, particularly in the gold market, I've got a couple of Australian stocks here. One of them here, Saracen. This company took over the largest gold pit in Australia only months ago, bought out the Kalgoorlie, 50% share in the Kalgoorlie pit, retained the same management in the process, so really just a bit of a change of depository where the money goes, but it hasn't bought the gold story. We saw it run up here also, and is really now, this is the weekly chart on the right-hand side, has really sort of come back and some very consistent or persistent, I should say, movements down on a weekly basis. And the daily chart was the real breakdown. The real breakdown was here in this mid-August area. We saw it move above this resistance level here, support, a break of support, the movement down, the retest of this level, and then finally the movement down again. So I wouldn't be surprised if we saw a stock like this, look for the window here, look for the gap in there. If we see any further, the issue, of course, is that the US dollar, the dollar index pushing the Australian dollar higher, and we'll see Australian gold prices fall lower as a result. So, and the companies will pay the price for that. When we look at Newmont as well, again, sorry, I haven't marked this one up. This is in US dollar gold price, of course, has really maintained this consolidation here. But the key here with this particular, there's your large movement, there's your, whoops, I'll come back this way. There's your resistance area there. There's your basically your sell bar, and now we're sitting around this midpoint, the middle of the range of this bar. We're sitting around there as a consolidation area. So I'd be a little concerned about that if we get any more rejection out of there as well. The other one, the other Australian one is Northern Star. And this is what I was saying, when we see the Australian gold price fall away, we see the local producers fall away. So not performing anywhere near what Newmont has done. It really has, on a weekly basis, really starting to test these previous lows here. So I'd be a little concerned with the local producers, particularly if we see the US dollar gold price break some levels. We'll see these producers also start to break some significant levels as well. And I'll just finish around some of the tech stocks. Some of the tech stocks in the US, this AMD here. So the key area here is this break here. We saw, this is a daily chart, we saw the breakout. There's the outside bar at the top. I cannot, the numbers around when you get a run in the market and you get an outside range after a significant run in the market, the statistics around that marking the turning point of the market are staggering. It's well over 90% that this will be the high for the short. Doesn't mean it's the high forever. Just means in the interim, it means that the outside bar has told you that the buyers haven't got it and the sellers are essentially, in this case, in control because it's a low close. But the against the trend, the market's in a little confusion and we saw the sell-off. But the low here came in last night, or today I should say, and tested this low here. This will be the key area when we saw the rally into the close there. Short positions closed out. You've got a long weekend in the US this weekend, so I would say short positions have been closed out. More concerning is the weekly chart in AMD now has an outside range as well. A breakdown from this level, you were going to be looking inside this consolidation area back here. We'll be looking here for some, if we get a significant break on here, looking here for some form of support, because as I was saying earlier, if you think about it as I know no one's emotional about their money. I know everyone has a cool hat on when their money's involved, but if it breaks lower, you'll pick up the latecomers in here that will be forced out of their position on a losing trade, and they'll add to the selling on the way down. So the market mechanics just work that way. Be looking also for the window here initially to be filled. This will be the key area. I had these marked up. I don't know where my things have gone, but that's the key area. When you're using your charts for the people doing the technical analysis on their charts, always mark up your charts with notable comments or notable areas of interest on your chart, like the consolidation areas or the gaps or the large range bars, that type of thing. Keep your notes on your chart so you can refer to them as you go back through your watch list. I think it's because I'm not using my list here. So the other one, of course, was Amazon.
Amazon is actually one of the symbols one of our viewers would like you to look at.
Yeah. Yeah. So again, this is a good example. These outside period here, which really didn't end up as a reversal. Another one here that didn't end up as a reversal, but it did mark the top of the market for 1, 2, 3, 4, 5, basically 6 weeks, and we saw the breakout. But once we get a break, this is the previous spike high here. It's a spike high because it has a lower high either side, so it creates a spike high point. And there's lots of them along your chart. You'll see them everywhere through your price action. But the ones that are standing out here are the ones that are really of interest. We saw one close above there. Now we've seen a close below this level here. This is of concern, as is the outside period here in Amazon. But on a daily chart here, the real key here is it today came down and tested this consolidation area, this for want of a better word, a value area through here, tested that level and then came back up higher. So we don't have trend reversal. The uptrend is still intact, but there has been certainly been some volatility as the longs are squeezed in this market. Of course, then Microsoft. Most of the US stocks, the bigger US stocks, have this outside range now set for the week, this outside period. And again, I know I sound like a broken record, as they say, but there's the previous spike high in here. Here's the close above, and here's the close below. If you mark off this as a methodology, you'll see here that the previous spike high here, we saw it tested, and then it closed above. So we'd be looking at this level as support level, but the market just moved on as part of the trend. So a key aspect of your analysis is looking at these past points to look for support and resistance in the short term. And again, it came back into this consolidation area. This basically July, August consolidation really came back and had a look at that. Now, in the scheme of things, it's actually a good outcome. If we started to close towards our lows today, that would be of great concern. It means it's discounted all of this area and the sellers have full control. But the fact that most of the fangs have really closed up into here, the indexes went positive during the day and at one point, and so it's a good outcome from a technical perspective in the price action. One area to watch as a theme now is this PayPal. In Australia, we've had a company called AFTA, which is essentially a buy now, pay later idea, and you can go to a shop and buy something or buy something online and pay for it with a thing called Afterpay, and it breaks up the payment of that item into 4 payments over a number of weeks, basically interest-free, until you get past. If you miss a payment, then the fees kick in, that type of thing. It has that particular Afterpay company is up 800% this year from the March lows. It's been a staggering success. They've now moved into the US market. You'll see them around. But more interestingly now is that PayPal, Amazon are now starting to move into the same idea where you can buy, and eBay has the PayPal platform on there, has the Afterpay platform on there. PayPal is moving into the same idea. PayPal is a significant threat to the other buy now, pay later companies. This is something really worth watching for continued price movement here or continued strength in their price. If they get the model right, PayPal has already in place a significant customer base that they can roll out this platform to of buy now, pay later type of thing. It's been a phenomenal success in Australia. It's the Australian company has opened in the US and just last week opened or rolled out their platform through. They bought a Spanish company in the Euro region, so they'll be rolling out their platform in Euro region. Their growth is exponential in their customer base. They basically sell themselves to retailers to take them on board. The retailer gets payment immediately, but the customer gets to pay it off over equal payments of generally 4 weeks, I think it is. It is the new credit card
here in the U.S. When I was growing up.
Sorry,
that's a very interesting concept, and they rely on people's inability or unwillingness to pay to further profit, which is
essentially the big issue, of course, is that they're unregulated because it's not a credit card company. So there's some things in there. There's now starting to attract the attention of the regulators that are because they don't do any credit checks on you, that type of thing. And so the regulators are now starting to sit up and take a little bit of notice.
But this is not a public company. You're just mentioning this as it pertains to the other companies that are looking towards it.
Yeah. Well, the AFTA is a public company.
Oh. Okay.
This is the Australian stock in here. Down here in March, it was trading around $8 after this. This is where the regulators really came in and took their first bit of interest. That was cleared up, and now we've seen them trade from $8 out to essentially $88, $90 in the last few months. But they're coming under pressure from PayPal and Amazon, and I think it's worth watching the MasterCard price, the American Express price, to see how they react around that. We saw one of the American Express here really hasn't taken out its highs from March and is really struggling here. So they're going to roll out this buy now, pay later platform. If it's a success for them, look for this high to be taken out just here at 114. So that's really the kind of theme that we're looking at. If you look at the American Express daily chart, here's a nice cup, nice handle platform, side of it. Just simply draw your cup line through here. This is the big level, and start to look for closes above this level as a technical pattern. But that's pretty much sums up the world. I think in summary of this, we're seeing the commodities hold up reasonably well. The copper, for example, silver, I regard as an industrial metal because it's used in industrial processes, particularly solar panels and things. So we're seeing those hold up reasonably well. They haven't had these mad corrections. I've had a bit of heat come out of them, but haven't had mad corrections. And particularly the US stocks have discounted all of the commentary around them. The trends are intact. In Australia, we're under a lot of pressure economically because of our border closures, and we're a much, much smaller economy than the US is, have a lot less flexibility than the US does as far as funds and money flow goes. So we're paying our market, or our index is paying the price for that. But that's, for me, that just about sums me up, I think.
Would you be willing to take a few similar requests?
Sure.
You already did Amazon. Someone's asking to see Tesla. I don't think you did Tesla.
Yeah. Now there it is. There's a Tesla weekly chart. There's your outside range again. Get in the habit of marking these things off. Outside range, outside period, whatever you need to do. Just get in the habit of marking these off. And we saw the low here, the low this week. Really come in and have a look at this this area here. This would be the area of interest. That level there, it's around 360. Interesting that they've done the stock split, and with Apple doing the stock split as well, and the market's really just continued to buy them. So it's a pretty good look with that. So there's the area of interest. Whoops. There's the area of interest right there. We saw it sell low today, close towards its highs. But I would remind, without repeating myself too much, these outside ranges often lead to a significant consolidation period after that, as the buyers and sellers work out where we're going here. So mark off your range of this week, your low of this week, mark off the high of this week. These will be the two areas of interest. And of course, the middle of the range of this week, around this 440, will be the consolidation area as the market regains its composure over the next couple of weeks. Again, the trend hasn't changed on this stock. The daily chart is intact. When you look at what this stock is capable of, with a high out here, a high of 358, a low in here, of 273. You've got what, $60, $80 movements. 360. You've got essentially a 22% movement in price here, and we're seeing the same type of volatility here in this movement. So that's what's when you go through and look at what a stock can do. That really brings into brings into a picture of what your actual risk is at all times. And so a lot of new traders, if you like, they often get the analysis right, but they get the position sizing wrong, and they can't work through these retracement times, and often hand their money over to the market as they're squeezed out. So position sizing is everything when you look at the volatility of price charts. Yep. Yeah, sure. Oh, what's the code for that now? Yeah. Yeah. You might pass on my email address or something, and he can send me. Yeah. Yeah, sure. Yeah. 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 So here it is again. There's your outside range for the week. This is what frightens the buyers up here, and how in some of them, they'd be in a fetal position in the corner of the room, basically, after this wide range movement here. But it is an outside range on a weekly bar. We saw a gap open here. A lot of people think that the gaps open are a bullish sign. They're actually a bearish sign, and I call these bearish gaps open. And if you look carefully at your chart, there's another gap open here, and that was the bar that really set the high. And then we saw a few days of retracement in there. So these gaps open, everyone gets excited because their account jumps exponentially on the open, but often they're a very bearish sign that there's something, there's basically the exhaustion move. So NVIDIA outside range on the weekly chart, very, very strong move again. It came in today and filled this gap in here. I'd point out there's another gap back down here, but did really check this consolidation area here, did close up towards the high of the range of the day. And again, I would simply draw a line through the middle of this range of this week, up in here somewhere. This will be the go-to support resistance area in the coming weeks. If it breaks this through here very quickly, you could possibly expect a retest of the high. This is, we may come back here Tuesday for you guys, come back here and simply put in a reverse pivot, bullish pivot point if we get a close above today's high. If we get a close above this high here, we have a bullish pivot in place. There's one here. That's the bar that made the low. Then you get a close above that high, gives you the pivot point. There's another one there. There's the bar that made the low, and there's a close above that high of that bar, and that gives you the pivot. If we see that next week, and it's generally within 3 bars, so it'll be Tuesday, Wednesday, Thursday next week, you could expect that there might be a little bit of a rally back in to possibly close this gap or check the high out through here. All right. Yep. Yes. Okay. Is that BAC? Oh, yeah. Bank of America. Yeah. Yeah. Interesting. And this is only my thoughts, of course. Here's the interesting thing around this. There's your resistance area, short term. There. We've got the same issue in this part of the world. Is the banks have really taken the heat over this closures of borders, closures of states, closures of businesses, that type of thing. There is a lot of concern, particularly in this part of the world, about mortgages, because the major part of the bank's business is just straightforward residential mortgages. That at the moment is, we believe in Australia, early numbers yet, but we believe there's about 15% of mortgages under pressure at the moment. In this part of the world, we're coming to the end of the moratorium on relief of that, where the banks are going to start step up, or the banks are stepping up to say, well, look, if you're under pressure, it's time to sell. A number of CEOs in this part of the world have publicly stated that. And I guess I would like to assume, I guess the same as in the US now, where we saw the employment numbers move, the part-time employment improve, but the full-time employment fall. It's going to bring in a little bit of pressure onto the banks. There's the gap at the top up here. This is the right-hand side here is the weekly chart, of course. Nice example here. I'll just get my little line out. There's the large push down. This is the large push down here. This is about the middle of the range of that. And here we are finding resistance here at this point. And this can go on for weeks. So we're looking for a close above this 26.50 to suggest we might get a retest of this $29 high. This type of, I don't have any interest. If I saw a chart like this, if someone was recommending it, I really wouldn't have any interest in this type of consolidation here. The movement down here, when you look at the midpoints, this will be the next resistance level. We saw one here as well. Saw one close above there that was positive, and then of course it rejected out of there. But this will be the next resistance level at 31, and then if we manage to work our way through that, you'd be looking at the gap as your potential target on there. But the lower high here back in April, capitulation movement down here. So this is a corrective move where it's taken out the previous higher lows in one straight move. Gives you your capitulation movement. And since then, we've simply had this. If we change this into a, for example, a monthly chart, this very strong capitulation move takes out the previous lows in there. And then after that, all we get is consolidation again. So it's, yeah, it's the tough time at the moment for the banks everywhere, I think. Yeah, sure. Yeah. Yes, it is. Beautiful morning too. Yeah. Okay. So, right. So I use, as I said earlier on, I use a weekly chart to establish where we are. The big money has trades in positions, trades with a view. And so the longer term picture is always the one to watch. The daily charts are essentially just noise. You can make a living out of daily charts, absolutely. You can make a living out of intraday charts if you put your mind to it. But the weekly charts are really where the theme plays out in prices and markets, is always in the weekly trends, long-term trends. We can see that in copper breaking into new highs. We can see that in gold with a big run up in gold and now consolidating. The intraday and daily charts here, this is the noise. This is where the news comes and goes. The rumors come and go here in the daily charts. The volatility between who's at the market on that day comes and goes in the daily charts. But the real the real holding of something is done here on a weekly basis and even a monthly basis longer. So always big picture first. Whenever someone asks me about a stock, always go to the weekly chart first. In most of my writing, I do write for Refinitiv and a couple of other companies. Always use the weekly charts to describe big picture of something. Yeah. You can contact me at APTA Trading. Now it's Gary, Gary, at ASTA, ASTA trading.com. You'll find the website there, ASTA Trading. You can have a look at the website as well. Not a lot of information on there, but it's a website. I don't look for a public high profile, but it's there. Happy to chat with anybody about stocks. Please don't ask me if it's a buy or a sell. I just can't go there with that. If someone's thinking of emailing me about would I buy this, well, no, I probably won't answer you. But to discuss trends, to discuss patterns and markets, absolutely. It's this is where the decision process takes place. Yep. Yes. Yep. Yep. Not terribly concerned at all. I would say not terribly concerned. It's more of a sideshow. Respectfully, it's more of a sideshow to what's going on in this part of the world. We're under enormous pressure here socially with this coronavirus. The medical people, with the social distancing, the lockdowns, the businesses can't operate, the home environment now, which has become the office. We're really focused on that. In this part of the world, we're coming under a lot of pressure financially through credit and mortgages, and which has a way to play out. Yet our government sponsorship of people who lost their jobs really starts to taper off now from September to October. I know there's a lot of conjecture about who might win the election and what will happen to the markets around that. There's no history of that, markets turning significantly on an election. There's no real statistical backup for that. The markets are really focused on the economy and how the economy is improving. And we saw, even as out of 2007, we started to see the rally out of that under a Democrat president. So I wouldn't read too much into that. We're not that focused on it. Yeah, sorry, I just tell you, sorry to let you down. Yeah, yeah, yes, yes, yeah, yeah. Thank you. ASTA. Yeah. Thank you. Thank you. Thank you.